The question is there a preference on time frames, 2 minute, 5, or 15? And the answer to that is really it depends on your, first of all, your trading style. I want to start setting up some charts to trade the S&Ps and focus on day trading the S&Ps. So I want to show you the time frames that I look at. The first thing that I'm doing is I want to look at the daily and the weekly and the daily charts side by side like this. And the reason for that is, first of all, I want to get an overall bigger picture view of the trend of the markets, okay? So I'm looking at the TTM trend, I'm looking at some other things on here, and we'll talk about some of these other indicators too. But if you're looking at this weekly chart, what do you think the path of least resistance is, higher or lower? Lower, okay? Now if you look at the daily chart, it's not as clear, right? I mean, you've got some blue bars, you've got some red bars, but right now they're red. But in general, what you want to do, your highest probability trades are going to be in the direction of the highest time frames. And I call these higher time frame anchor charts. And where a lot of people get chopped up is they'll take every long signal or they'll take every short signal, when really if you would just wait for the signals that are in line with your bigger time frame chart, you're going to increase the odds of your success. So right now the weekly charts are lower. So if you're just, say, taking swing trades off the daily chart, okay, so first I'll talk about swing trades and we'll talk about day trades. I could start buying this here when it turns blue. All right, we got the two blue bars, so it's like, okay, do I go long here? Well, the answer to that is no. What I would do here is, okay, first of all, we've got the red bars. So when we get two red bars here, do I go short? Yes. All right, so now I'm short, I'm short, I'm short. Wow, we've had this huge bounce up. Now we got two blue bars, so I cover my short. So now do I reverse and go long? No, because what I want to do is I want to wait for the next signal in the direction of the weekly chart. All right, so oh, we got two red bars again. Great, it's time to go short. Now on this one, I'm like taking a little heat on it, but it's still in the direction of the overall trend. Now remember, this is a swing trade. This is a trade I'd be in for a couple of weeks. All right, so now the same concept with swing trading also works if you're day trading. All right, so if I'm going to be day trading, what I'm going to do is I'm going to come over here on the S&Ps, and let's look at an intraday chart. Let's look at a 60-minute chart. And then over here, let's look at a tick chart. And on the S&Ps, I like to use a 233 tick chart. And if you don't know what a tick chart is, instead of, like, say, a 2-minute chart where it makes a new bar every 2 minutes, the tick chart will make a new bar every 233 trades. All right? And the reason I like that is because, like, guys in the pit, they're not conscious of, like, the 2-minute highs and lows or the 5-minute highs and lows. They're really focusing on the trading velocity of the market, the amount of trades that are coming into the pit. And if you're looking at something like a 233 tick chart, if the market's really slow, okay, like on the overnight session or during the doldrums during lunch, then these bars are going to form slowly. It's going to take a while to get 233 trades. Okay, oh, here's another 233 trades. But if we've just opened or some economic data has come out, then these bars are going to form really quickly, like, 233 trades. So what's going to happen is when the market is slow, you're not going to get sucked into it because you're not going to get that many signals. But when the market is fast, they're going to be firing off pretty quick, which is why I like that time frame. So if we look at Friday's action, so what I'm looking at here is, let's see, let's try to move this a little bit.
John, the tick trades you only do on SPX?
The tick trades I'll do on most. I do them mostly on the S&P futures and then the Dow futures, and then I'll also, if I'm doing some scalping, like in the grains or gold.
The magic of 233.
That's a good question. The question is, what's the magic of 233? Generally, anything that I'm using, like moving averages or tick charts, I'd like to use some derivative of a Fibonacci number. But would a 236 make a? It'd be fine too. In general, I'm comfortable with Fibonacci's, so I'll use those. So what's important here on the 60-minute chart is, let's see, let's line these up a little bit. So like, here's just like an example of like, okay, so here's that data. So if the 60-minute chart here, the TTMs are red, all right, so now I'm waiting to see what kind of signal should I take. So right here we get two blue bars. Okay, now I'm not looking at this candle right here. I'm looking at, here's the data. So if we get two blue TTMs on the 233 tick chart, am I going to go long the S&Ps there? No, because I want to wait and trade in the direction of here. So then when we get the two red TTMs here, am I going to go short? Yeah, because that's in the direction of the 60-minute chart. And then I can look for two blue TTMs to get out. Oh, there's 2 blue TTM, so get out.
What's the TTM line again?
Oh, that's just that's the TTM is the red and the blue bars. The trend change. The red.
Not the 6-day moving in, not the 6-day.
That one. That's the red. It's that whole thing I was talking about, the 6 days back. That's what forms the red or the blue bar. Got it? Okay. All right. Does that make sense? So that's one thing I see a lot of traders not doing is referencing a higher time frame like that. And if you just trade in the direction of the higher time frame, you kind of put the odds in your favor. What a lot of people do is they'll look at just, say, this chart, or even this, like, let's say a 2-minute chart. And a 2-minute chart is a common chart that people use, or a 5-minute chart. And this is all they're looking at. And it's kind of like, okay, well, wow, here's a buy signal, let's take that. Oh, here's a short signal. Oh, it just kind of goes back and forth, back and forth, back and forth. But what's nice is that the tick chart, first of all, filters out the slow activity. And if you're also using an anchor chart like the 60-minute chart, then you're going in the direction of that trend, okay, and it's putting that in your favor.